Hey everybody, Mortgage Seth here. I wanted to give you an update. I know there's lots going on, lots of confusion. It's a crazy weekend. You're hearing all kinds of updates on what's happening in the financial markets. Everybody's got their perspective on it. Um, One of the things that I subscribe to is called MBS Highway. One of the most renowned people in this industry. He put out a 1 hour Facebook Live yesterday. Barry Habib, he's really the go-to person. He's on Fox Business, MSNBC. They go to him when they want to find out what's going on in the mortgage market. So, wanted to summarize what he said. I'll post a link to this the Facebook Live that he had. I think it's on some public real estate website, so you guys can see the whole thing. But what I wanted to get across to you, of course, is I hope everybody is safe, maintaining their social distance, and taking the advice of the authorities that really have the insight to what's going on to help stop the spread of this coronavirus and to stem the panic that's happening. We're going to see some tough times. There's definitely an impact on the economy. People are not going out. People are going to start feeling the effects on the businesses that they're in. I know Apple stores are closing for a long term. It's just there's going to be an impact, and that everybody's been talking about a recession for some time. This is definitely accelerating it. People not going to school, people having to stay home with their kids, working from home. Business is definitely going to be suffering. We're going to see manufacturing reports come out, all the things that the finance markets depend on for their news. We're going to start seeing all those updates, and there's really going to be a big impact on the economy. The good news is that we're going to get through this. We've been through some tough times in the past. The markets will respond. They were kind of overinflated since last September. We've seen some shakiness in the markets. The Fed has stepped in, done what they can to try to stabilize things. And this latest cut to this 0% Fed funds rate, there's a lot of confusion over that. So remember that my perspective and the purpose of this video is to talk to you about what the impact is on the mortgage market, the overall market. You can find other sources of information for that to see what's going on there. But really the effect that's happening in the mortgage markets is what I wanted to focus on. And ever since last September, there's been this kind of overinflation in what's been happening, and we've seen the interest rates, up and down since then. I'll show you a chart in a minute, but you have to remember that the Fed funds rate is not what mortgage rates are at. So even though we hit a low about a week ago in the mortgage rates, we saw around 3% and lower. That doesn't correspond to the Fed funds rate directly. That, when we hit that low, the Fed funds rate was, a point and a half higher than it is now. So maybe 1.5% is what the Fed funds rate was at after their last cut. And we saw an impact on the mortgage market. But the Fed funds rate is the amount of interest that banks get charged to borrow money. So when banks borrow money, now it's at 0% interest. They can still loan it out and make a profit. Of course, that's what they're in the business of doing, and that's what it is with mortgages. There's always a margin in there that the mortgage rates are going to be higher than what the Fed funds rate is, and you can dig into that a little more. Fed funds rate is really the short-term rate. I've made other videos about that to talk about it from Fed updates before. But what we really need to look at during this time is that we had this huge surge in refinancing and people taking advantage of these lower rates, and the impact that has on the industry. You have to think about the numbers, that if there's $5 trillion worth of business that's out there for refinancing and for people that have enough equity in their home to take advantage of refinancing, 5 trillion is just an unsustainable number for what the capacity of the mortgage industry can handle. In a typical year, I think the number's around 3 trillion in transactions, and half of that's purchase. So in a typical year, there's about $1.5 trillion worth of refinancing, and that happens over 12 months. You have to remember that what we're talking about over the last few weeks is all this new volume coming in, that there's no way we can handle $3 trillion worth of capacity in a month when we're used to doing that, half of that over a year's time. So you have to be patient. This isn't a time where there's just this one dip in mortgage rates and it's going to be over. This is going to be a longer term thing over the next weeks and months. We're going to see rates down low. What we saw happen last week is that as all this flood of refinancing came in and banks were tested on their capacity, they started to increase the rates to artificially suppress the new refinance applications coming in, and I saw that. So we have this ton of volume that's coming in, and we're locking everybody, locking at 3% and lower, and then that was on Tuesday, and already by Friday we had seen rates go up to 4.5%. When I checked the Wells Fargo retail website on Friday, for somebody in the same scenario that I locked on Tuesday at 3%, Wells Fargo is advertising 4.5% with a half a point. So you can see what's happening with some of these big retail banks. They're really trying to stop this capacity because they know they can't serve it, and they're not making any money on these refinances at these really low rates. So we just have to take a step back, um, be calm during this. Trust your mortgage professional that we're going to handle the situation. We're in the trenches every day. We see what's going on with the market, and we're going to take care of you. The perspective that's important to keep is that we're at a historic all-time low for mortgage rates. Yes, there's a great chance to refi. Yes, it's a great time to be a buyer because rates are so low right now. But this is the lowest it's ever been. So we can't get too greedy in this business, or as a consumer. If you can get a 3% rate or lower, then it's a great time to take advantage of that. You don't want to miss the opportunity by thinking, oh, I can get a quarter point lower or a 0.5% lower, a month down the road. The opportunity will still be there, but it's just like the stock market. Trying to time the bottom or trying to time the right buying opportunity is always going to get you into trouble. Take advantage of these low rates that are there now. Have some patience with your mortgage advisor. Get locked in maybe on a longer term lock. Ask them about a 60-day lock instead of a 30-day, which is more typical, and get the rates locked in, and then let everyone just get the job done for you. Remember that we have a lot of work on the back end of these files to do. It does take time. Our staff is stressed and pushed the capacity right now, trying to provide the level of service that everybody wants to have. That seeing the markets go up and down, my phone was blowing up over the weekend. A lot of confusion on what the 0% Fed rate meant, so that's part of the reason I'm putting out this video. But again, the people in this industry, we're in this for the long term. It's not about trying to see how much volume we can get in a month. I know there'll be record-breaking months, and this will be a good year for us in this business. But I don't want to lose the perspective on the overall effect of what's going on in the economy and world health. There's bigger things to worry about out there, and I think that we get so focused on these super low rates and trying to do the best for our clients and for ourselves to take advantage of what's going on for this great opportunity that it is, that we just need to remember to be patient, let everybody do their job. Please, ask whatever questions you have. I'll try to answer as many as possible. My biggest message is to trust in what's happening for the long term, and trust your professional relationships that you have, because over the next few months, it's going to be some trying times. And we are hearing now that the peak of this health concern, the coronavirus and what's happening with all the new cases, that the experts are saying that it hasn't reached its peak yet, and that's going to come sometime in April. So we're in for a few weeks, maybe months of difficult times with people worried about their jobs, the government doing everything they can to keep the economy strong. So, as far as the mortgage rates go, let's get locked in. I'm telling people, get your files in, send in the documents that I need so I can be ready to lock when the time is right. But let's not lose perspective that the rates are the lowest they've ever been in history. There may be an opportunity for you to get your rate a little bit lower, but don't stress out over these incremental changes that may make you miss the bottom. So you don't want to have regrets that you locked in at a 3% rate when now it's 2.75. The amount of savings that's there is relatively small, and there's other ways that you can pay down your principal faster, that you can save more by locking in on these low historic rates, but not being worried about where the bottom is going to be. So keep the big picture in mind. Let's pray for everyone that's affected by this, whether it's in their jobs or in their health. And we'll get through it. This country is strong. We've been through some tough trials before. See the ups and downs in the market, and I know a lot of people are suffering right now and concerned with what's going on. So let's spread some positivity. Let's be optimistic about what's coming in the months ahead. I know these few weeks are going to be tough, but let's all work together to to help each other, take advantage of what we can during this time for the opportunities that are there, but also remember that that's not the most important thing. That there's other help that we can provide to people, and reassurance, and let's spread the love, be positive, and we'll get the job done for you. If you're looking for refinancing or buying, then talk to your professional, give me a call, message, whatever it is. But reach out. Let's be in touch, and let's think about the longer term, what's happening over the next few weeks and months, rather than trying to scramble for what's happening in the market day to day. So that's the overall message. I want to what I want to do is show you my screen and show you some of the ups and downs that's been happening in the market over the last couple days. It's really interesting to see. All right, so let's take a look at this chart of what's been happening over the last few months. So the greens are the improvements in mortgage rates. This is the mortgage coupon, and the value of it. So as you see the green and the value going up, that means rates are going down. I know it's a little hard to follow. Just think that it's remember that this is the opposite of what rates are doing, and this is today's spike. So after the news over the weekend, we're definitely seeing an improvement in mortgage-backed securities, and we're seeing that that rates are coming down again today to kind of make up for the loss. The other thing that I talked about earlier in the video is the capacity issues that the banks are having. So not everybody is adjusting their rates to keep up with what's going on, because they can't handle the capacity. So it may be a locking opportunity, it may not. We'll have to see what happens during the rest of the day. All these triangles here are these alert to locks that I get for when these big swings are happening. And you can see this was last Tuesday that I locked most everybody in when we got the word that we were about at the best pricing that we were going to get, and that's when we saw those super low rates that we were able to lock in. So I guess the point is that if we look at this over the last 6 months, we really see where the rates hit the bottom here last week, and then the perspective to keep is that we've been having this improving trend over the last couple months, and the expectations are that we're going to hang out in this same area, that there's going to be some opportunities over the next couple months to still take advantage of what's going on with these lower rates. We just might have to be a little patient, but we'll be here to lock you in when we see the right market opportunity.